Okay, we're going to take a look at fixed income investing strategies here. We'll look at some portfolios. We're also going to look at money market rates, CD rates, treasuries, bonds, and we're going to look at the overall market conditions as far as the yield curve. So for those out there that don't want to invest in the market, or maybe you need to save for a short term, you're saving for a car or just putting money aside, you don't want to tie it up, or maybe you want to put it into a CD, get the best rate, and you just want to be safe with it. We're going to take a look at all of these factors here in our fixed income investing strategies and portfolio. Okay, we're going to start with the U.S. Treasury note and bonds here. Just take a look at what the interest rates are looking like. Here's the 3-month maturity on the 3-month bond or Treasury note, and it's 2.43%. And you'll see that the shorter rates are actually higher than some of the longer term rates. So 3-month is higher than the 1 year, 2.29, 2 year 2.27, 3 year out to 2.24, and then the rates start increasing. So we have pretty much a flat yield curve right now. When these longer term rates become lower than the shorter term rates, then that's what's called an inverted yield curve. So right now, the shorter term has pretty decent rates here. The Fed has been increasing the rates over the last couple of years, and that's allowed the short-term rates increase. And then, of course, with some of our slowing economy, the longer-term rates have been decreasing. If you want to invest in Treasury notes and bonds, of course, these are very safe. You would go to the Treasury's website, U.S. Treasury website, and you could invest from there. The next area we're going to look at is money market funds. What's the best rate on money market funds? So you can park your money in these money market funds and take it out at any time, and you get a pretty good rate on it. Vanguard Money Market 2.44%, Charles Schwab 2.28%, and Fidelity Money Market 2.25%. So this is a very safe way to go for some short-term money, and these are safe investments. You're not locking your money up for any specific term. Okay, let's look at the CDs, certificate deposit. So you're going to get these at your bank or thrift, and you're going to lock up your money for a term, either 1, 2, 3, 5, depending on what the bank has. You can get them every 6-month increment also. So right now, the 1 year is running around 2.85 to 3%. And these are pretty much the highest rates. It's going to vary at different locations, and many of these are over the internet, through banks through the internet. So you can see a 1 year is just a little bit less than a 2 year. There's not a whole lot of advantage though going out 3 and 5 years. Now if you had $100,000 and you were going to invest in CDs, you could set up, say, like a 3-year ladder. You do 33,000, put it in the 1 year, 33,000 a 2 year, and 33,000 in the 3 year. And then when the 1 year renews, then you roll that into a 3 year, just kind of keep laddering it and getting the best rates over a 3 year period. Of course, the rates could change down the road, but right now, that's probably your best strategy. You could go out 5 years and get a little higher return, and that would make sense also. Some other ideas here on short-term money, short-term taxable bond, like double-line low duration bond fund pays 3.38%. So you're putting it into a bond fund because it invests in real short-term Treasury securities. It's pretty safe. Never want to say 100% because you never know what could happen, but it's pretty safe, 3.38. Then you got the Fidelity Floating Rate Income Fund. It's 5.52% right now. It's very short-term maturities out to 0.2%. A little bit more risk in these because they're a higher return, but what makes it safer is that they're very short term. You're not going out and locking in your money for a long term. For those in the upper income bracket, let's say probably $75,000 a year higher, you could use a tax exempt. Vanguard Municipal Tax Exempt. It's paying 2.01% right now. Duration 1 year, so it's very short term. Vanguard short term tax exempt 1.65, and Vanguard tax HighYield is 2.88. It has a longer duration. So these rates are lower than what we were just showing, but they also there's no taxes on these rates. And then some other options here would be high yield bonds and municipal bonds. The average return or interest on a 20-year bond is running about 3.75%. So you typically need $200,000 or $300,000 to make that worth your time on setting up municipal bonds. Okay, we're going to look at some charts here on some of these bond funds just to give you an idea what they're doing, what it looks like. There's a low duration bond fund, DLSX double line, duration 1.1 years. This is a very good short-term bond fund. Now, the price of the net asset value has been going up because, generally speaking, interest rates have been going down. As interest rates go down, the price of the bond has been going up, and then it pays a 3.38% 30-day yield. This is not the yield here necessarily. This is just the net asset value. Let's take a look at the double line total return bond fund. It's also been going up. You can see it can fluctuate a little bit depending on market conditions, paying 3.43%, duration 3.5 years. So you can see going out longer term is not a lot of advantage over the short-term duration fund here with 3.38%. And then the Vanguard Wellesley fund is yielding 3.13, but it does have 30% dividend stocks invested in it along with bonds. One other note on the bond fund, now you can get some capital appreciation on the total return bond fund. That's going to be a larger total return than you would in this in the shorter term bond fund. So just to get some market exposure, Vanguard Wellesley Income Fund is an option to give you some market exposure. Dollar cost average in any of these right now, the market has been moving up. Any kind of a pullback down would be good for the market, but you don't want to go full all in at a time when the markets has been moving higher. So dollar cost average in Osterweiss Strategic Income Fund yielding 4.48. This gives you some extra diversification. It's going to be corporate bonds, duration of 1.3 years, so that's good. This is the net asset value. You can see how little fluctuation back in late 2018, and then it's moved higher. So you get a little capital appreciation along with corporate bond exposure. So this one has a 4.48. You can see a portfolio here that a person could use, something like this, depending on your expertise and your interest. We got the 10% of Vanguard Wellesley Income Fund, gives you a little exposure to the market. Fidelity Floating Rate Income Fund, 10%. Vanguard Money Market Fund, 20%. 30% Double Line Low Duration Bond Fund, 20% Double Line Total Return Bond Fund, and 10% Osterweiss Strategic Income. You can see what the 30-day yield is on these particular funds. So most of these bond funds, I would be going in dollar cost averaging in those. The only one that I would do a lump sum would be the Double Line Low Duration, and then of course the Vanguard Money Market Prime. Those would be the only two. If a person wanted to have a little bit more exposure into the markets, you could add the Vanguard High Dividend ETF. It's going to pay a yield of 3.31. You do get some fluctuation in the price of the stock, or the other option here would be Schwab US Dividend Equity ETF. These are ETF funds, and they invest in high dividend blue chip companies. And so the Schwab's paying 2.83. So I will use both of these here to invest not only in the dividend but also in the capital appreciation. Okay, so for those that want to be tax exempt income, here's the Vanguard Short-Term Tax Exempt Fund, 1.65. You can see here we've had some pretty good capital appreciation. For just parking money, Vanguard Municipal Money Market is a excellent money market that's tax exempt. Fidelity Long-Term Municipal Income, yield 1.78, duration 2.4. And then we have the intermediate municipal income by Fidelity, 1.96, 4.8. We're going out a few more years, but we're not seeing a whole lot of return there. That's extra, 1.96, 1.78. And then over here we had 1.65 at 1 point years. Vanguard intermediate term tax exempt, we're getting over 2% here, going at about 5 years. T. Rowe Price Summit municipal income has a current yield 1.85, 4.75. Vanguard high yield tax exempt, 2.68, 6.7 years. So those are all tax exempt funds. So we've been talking about fixed income investing strategies here, portfolios, and also the money market interest rates, CDs, treasuries, and bonds. Went over some strategies. If you have any questions about the latest in interest rates, bond funds, leave us a message. Hit the thumbs up if you like the video. Thanks for watching.